Hey, welcome investors to the 40 Finance channel. Today I'm talking about stock buyback programs with an eye on the 2022 stock market. I'll give you a quick one-on-one on the positives and negatives of buyback and repurchase programs. I'll also share a few data sources so you can figure out if your stocks are potentially repurchasing shares. And then finally, we'll look at the big players, the top 20 big players in terms of how much money they've spent to buy back shares. So overall, the goal here is just to understand buybacks, get a feel for who's jumping in on this strategy, and just give you some food for thought as you think about the stocks that you might buy in 2022, whether you're buying more shares of them or just thinking about new stocks that you could potentially add to your portfolio. All right, let's kick things off with the 101. These are just a few simple ideas to think about when you hear a stock is starting a buyback repurchase program. These are the sort of the triggers in my brain, I guess you would say, where my mind wanders, because each individual case is different. Each company has its own rationale for doing repurchases, and each company's in, quite honestly, a different financial situation. So it's not apples to apples on this one, and here are a few things to think about. All right, first on the positive side, the general purpose of doing a stock buyback is to lower the amount of shares outstanding. When you have less shares out in the market, then all your other fundamental metrics on paper go up a little bit, right? So you think about things like revenue per share, earnings per share, all those concepts get a little bit of a boost as there's less shares to divide them by. All right, next up you see here, less dividends to pay out. This obviously makes sense. If you have 100,000 less shares outstanding of your stock, well, that's 100,000 less dividends that you pay out per share. So obviously, dividend investors are going to be a little mixed on what they think about a share repurchase program. However, those types of investors would still theoretically benefit from the fact that the shares that they do have should be worth more from a fundamental value standpoint. All right, the next positive, investing capital during periods of limited opportunity. So if you think about companies that have a ton of cash on the books, think about your Apples and your Facebooks that have billions and billions of dollars of cash. And in many ways, whether it's regulation or valuations of companies, there might be limited opportunity to buy other companies, right? And there could be other factors at play that would limit the company's opportunity to reinvest back in the business. And having cash on hand, cash in a bank account, particularly at the levels that Facebook and Apple have, is actually considered a downside for the same reasons that we invest, right? We don't want to keep all of our money in the bank because interest rates suck and it's just a limited return. So particularly for big companies like Facebook and Apple, who would have to make a major acquisition to really impact the bottom line, there is certain cases where stock buybacks are frankly the best investment available. All right, and positive number 4, and I kind of alluded to this at the beginning, but it's generally positive for stock price appreciation. Like I said earlier, the less shares that are out there theoretically makes your shares more valuable because they represent a percentage of the company's earnings and sales. All right, so what are some of the negatives to think about on a case-by-case basis? The first one is going to be missed opportunities. You'll meet plenty of investors who don't like stock buybacks because they think the company should be investing into the business. So that could be CapEx, right? Think about new technology, new warehouses, new distribution chains. Those are ultimately purchases that detract from the bottom line, but over the long run should return on the invested capital. Another consideration is debt repayment. And this is big, particularly when you see smaller cap stocks start a repurchase program, because the first thing that you're going to hear is, wait a minute, they have X amount of debt, and now they're buying back stock. Why wouldn't they get rid of this debt first? Again, it's a case-by-case scenario, and you as an investor have to determine in your own eyes, do you think it's a good idea? And you see the last point there on acquisition. Obviously, any company that's spending money on buying back shares could conceivably go out and acquire a company to improve their market share of the business units that they're in. The catch is when you get to like the Facebook and Apple size, your acquisition has to be so big in order for it to really improve your bottom line, right? That just picking off like a onesie, twosie biomedical firm or something, it's just not going to move the needle. It has to be a pretty good scenario to be worth their time and all the regulation hassle that they're going to get through closing an acquisition. Okay, the second point here, poor timing could lead to buying expensive shares. So conceivably, we are in a market that many people would say is expensive, at least in terms of like a P ratio, compared to some numbers that you saw back even in the late 2010s, right? If you are skeptical, perhaps, of a stock buyback program, it could be because you think the current shares of the company are overvalued. In a perfect situation, some of these buybacks come in after the stock has had a significant drop, because that can be an indicator that, hey, the company thinks that their stock is on sale, so to speak, so that they're buying these shares. So it is important to consider the current stock valuation before these repurchase programs go into effect. All right, and this isn't really a negative, but it's more like how to think about the positives and negatives, I guess. This is really, repurchases are a program that are best for companies that have a ton of cash, a minimal amount of debt, right? So again, companies that have limited opportunities to do other things with their money. So if you see a company perhaps that doesn't fit that criteria, then there could be a lot of negatives associated with the buyback program. One, if they can't find other investing opportunities, and let's just say that they're a mid-cap or a small-cap stock, then that could be a warning sign. Secondly, if it's a company that has a lot of debt and they're spending all their money on share repurchases, you could make the argument that they might be doing it to inflate their stock price, and it's not really in the best interest of the company over the long term. All right, so now we're looking at data sources. How can we find out more about companies that are buying back shares? All right, so when you get to this S&P Global page for the S&P 500, it's actually buried. So below this chart, you have a documents area, and you want to hit this little additional info, and it's the last link. So if you scroll all the way down, it's this last link here, S&P 500 stock buybacks. That will open up for you an Excel spreadsheet. All right, when you open this up, you can see the historical information is on the first tab, and you have buybacks in billions here across recent history. And even if we just look at the 12-month period through Q3, you had $742 billion in buybacks through the last 12 months. Compare that to the 12 months prior, you had 570 billion. So the amount of buybacks has definitely increased. And one of the cool things you can do is break this down by sector, and you can also see the top 20 companies in terms of how much buybacks they've done. So I talked about this in the intro. Top 20, now keep in mind that this is for Q3 of 2021. So it basically changes every quarter, but you can also sort by 12-month periods, 5 years, and 10 years. For this video, I'm just sticking with Q3 because that's where we are. And it was Apple, Alphabet, Facebook, Oracle, and Microsoft as your top 5 for the third quarter of 2021. And one of the things that's sort of eye-opening right off the chart is just how much more Apple, Alphabet, and Facebook have bought back compared to, say, even Microsoft. And then you kind of go down the chain a little bit more, maybe Morgan Stanley. I mean, if you compare this to Apple's number, you're talking about Apple almost buying 7 times the shares as Morgan Stanley did for their stock. Now, certainly there's plenty of reasons for that, but it's just interesting to see the different scales that each company is doing. All right, so we got some good information there on the top 20 companies that are buying back shares as it relates to Q3, right? Now, while those numbers were nice, it's kind of hard to visualize like what kind of impact would that actually have on an individual stock, right? I mean, you think about Apple, and granted, they're buying the most of any company in Q3. Fact of the matter is, Apple has a lot of shares outstanding, so it's really hard to make your brain work and figure out what is the actual impact that this could have. Is it just like 0.01% of shares, in which case the impact would be nominal? Or is it much more than that? So one easy way to kind of visualize this data is on SeekingAlpha. And if you're interested in learning more about SeekingAlpha, my affiliate link's in the description. They got a fantastic discount offer for you down there for 1-year subscribers, so check that out. Now, when we look at Apple, here's a quick demo of how you get there. You're gonna land, this is the Apple stock page, right? Usual information. Then we go over to charting. And by default, it's the price return. And we want to look, I just type in shares myself, and you get diluted weighted average of shares outstanding. And I kind of prefer to look at it in columns because I think it represents better, but you know, whatever works for you. Then I take out a comparison. I don't really need that comparison because I just want to see Apple in a standalone environment, the number of shares outstanding. And this is a 1-year chart. So back in 12/26 of 2020, you can see the number that hovers over top, 17.35 billion. Then we go down to 9/25 of 2021, and you're down to 16.8 billion. So for the last 4 quarters, Apple has bought back approximately 500 million shares or so. But where it gets really interesting is over the long run, and you start to get a feel for how Apple has created the shareholder value. So here's the 3-year look. Here's the 5-year look. So 5 years ago, 12/31/2016, Apple had 21.7 billion shares outstanding. And if you were a stockholder back then, and you just simply hung on to your shares, you can see that beyond even revenue, Apple has made each share more valuable simply by taking them off the market. So we get down to 9/25 of 2021, you have 16.86 billion. What was the starting point again? 21.7. So they have bought 5 billion shares of the company's stock in their repurchase program over the last 5 years. That's an average of 1 billion a year. Now that doesn't mean they're buying 1 billion every year, of course, but it gives you a good idea of a company that's been very aggressive in their stock buyback program. And we also know about Apple that they have a tremendous amount of cash on hand, and they also have a very solid cash flow just being a consumer business and all the money they bring in. Now let's do the same thing here for Facebook, because I think they were another good candidate for a stock buyback. So just one more demo here. We want to go down. We want to look at shares. Click that. I like to switch it to columns. Now we want to remove this S&P 500 because we want to look at Facebook just independently, because we're not trying to compare this data. We only want to compare it to Facebook. And you can see that they've had some interesting dynamics in their shares outstanding over 5 years. 5 years ago, there was 2.93 billion shares. Today, there's 2.88 billion. It looks like with Facebook, you've had some small fluctuations in the amount of shares outstanding, but we also know that in Q3, on the historical data, they were one of the top companies buying back shares. So is this indicative of a future trend for Facebook? It could be. That's where you just have to go out and do independent research. You usually just headline research with Facebook to see what kind of buyback programs they might be thinking about. Now on SeekingAlpha, it's pretty easy because they have an index of all the news, so you can just type in Facebook buyback. We're looking for news, not opinion. And you do have to scan the headlines. I wish there was an easier way, but there really isn't. And scrolling down here, so we had a buyback on January of 2020, $10 billion. Then this year, on January 27th, right? Yeah, January 27th of this year, they did announce a new buyback, $25 billion, in addition to the previous $35 billion authorization, of which $8.6 billion remained. So the point here is just you do have to dig a little bit to figure out how many future buybacks are going to be going on with your companies. And usually they're going to release a press report or they're going to talk about it in their earnings report somewhere. All right, another good place for ideas regarding who's doing repurchase programs is this PKW ETF here, going straight to the holdings, right? Not trying to overthink it. That's going to be best done on the Invesco website because they sponsor the fund. And you go straight to the holdings. You can even download them. And you just comb through here trying to think about, hey, is there any stocks on this list that are already on my watch list? From there, you got to do the back end math, right? You got to do the research. How does the company sit financially? How much of a buyback program is it? And what do you think it will do to impact the stock price, right? But this is a good list to get some ideas for and potentially go back and merge it with stocks you're already watching. All right, investors, so that's a sort of quick 1-2 on stock buybacks. What things should you be thinking about in terms of how they relate to the stocks you own? We also cover where to find some data on stock buybacks, some ideas. So hopefully this was helpful for you. If it was, please like the video, share with your friends, subscribe to the channel, all the things. We'll see you on the next video.